Billionaire Ray Dalio's optimism about the Donald Trump presidency seems short-lived. In a letter to clients, Dalio and Bob Prince, Bridgewater's co-CIO, wrote, "Global free trade and free exchanges of ideas produce efficiencies, synergies, and competitions that are beneficial to the global wealth pie growing, whereas protectionism has the opposite effect. Nationalism, protectionism, and militarism increase global tensions and the risks of conflict. For these reasons, while we remain open-minded, we are increasingly concerned about the emerging policies of the Trump administration." Here with more details is Bloomberg's hedge fund reporter, Simone, Foxman, who joins us here on set. This was a pretty quick about-face. We remember the LinkedIn post right after the election in which he talked about the magnitude of the potential seismic shift that would come with this election. What's changed in his estimation?
Well, at that time, he talked about that shift being broadly positive for business. He did mention protectionism, did talk about populism, but at that time, you know, those things weren't as concerning to him as they apparently are now. And I think this is something you're seeing across a lot of Wall Street. And Dalio being one of the first to come forward with this is people took Donald Trump seriously, but not literally.
Yes.
And now that they're seeing the literal impact of his policies, I think they have to go back to their research and say, did we miscalculate here?
Well, let's have a listen to something, because in Davos, our own Eric Schatzker spoke about the damaging effects of populism with Dalio. Let's have a listen.
Globalism is threatened. The multinational corporation is in jeopardy. Emerging countries are threatened. Domestic companies are benefited. You know, there's a whole host of those types of things that go on, right? Those are, the question will be, will the openness that began in the 1990s with trade agreements and globalization continue, or will it reverse?
There we go. So what's the upshot, Simone? Because let's face it, these guys want to make money, and he's been doing pretty well. So how do you profit from this environment?
Well, it's certain sectors, and I think different people have different opinions of exactly which sectors. They see oil generally continuing a little higher, this inflation rising. But I think the concern, if you're a macro thinker like Ray Dalio, who's invested in markets across the world, is, you know, do U.S. positive policies, for U.S. business positive policies, contribute to sort of a global recession? And I think that's sort of what he's grappling with now. That's certainly what other managers earlier this week, too many managers from Carlson Capital, said the same thing. If you start a trade war, you know, we're going to see a global recession.
Very quickly here, somebody else who was thinking about these issues at altitude in Davos was George Soros. He sat down with Francine Lacqua, called Donald Trump a con man. His performance last year was not great in comparison to Ray Dalio's. How's his approach different?
Well, first of all, he was a bit more bearish middle of last year. Certainly saw more problems with China seeping into the larger economy.
Brexit, of course.
Brexit as well. And I think some of the rhetoric has gone very euphoric, not only on the United States, but on China as well. I think there are not that many people talking about, you know, that problem, just the fragility of that economy. And that could be another thing that sort of sets a recession in motion.